Welcome, Boundary Breakers. So today, as I mentioned, Nick here from Moneta. I mentioned earlier on one of my favorite proverbs, if you will, when it comes to insurance is one that is, we don't buy insurance, we buy what it does. And that's part of the battle. I had a great one-to-one with Corbin a couple of days ago. One of the questions he asked me was, what's one of the hardest things to get across to people in what I do? And that's probably it, is getting the value across the line of understanding what this is and how important it might be for you. And the key to that is actually, as I mentioned, with this statement, we don't buy the insurance, it's understanding what that insurance will do for you. So I've got a couple of answers to that. Number one, so we don't buy insurance, we don't buy what insurance does, and it keeps what you've built yours. Yeah. So what do I mean by that? People think they're buying their life cover, their income protection, or their trauma cover. It's not the insurance. They're actually getting the ability to keep the asset that the debt they have paid for. Yeah. So it's not just protecting the debt, it's actually what did that debt get you? Yeah. So you got to remember, debt doesn't disappear when your income does. Insurance maintains your ability to keep servicing that debt so the assets aren't forced to be sold. So it can protect your home, people with a home, someone with an investment property, maybe the business assets that they have, and especially your shareholder equity if you own that business. So just something to think about there and the people that we're talking to. Insurance doesn't clear your debt, it gives you the ability to keep what the debt helped you buy. Another way of framing it. All right, number two. We don't buy insurance, we buy what it does. It buys time, choice, and speed in healthcare. I talk about access to treatment. Yeah, this is what I'm talking about here. So it's not just the health insurance, the trauma that you've got, but what it actually does, it gives you that immediate access to the right treatment in the right place, the right time. Yeah. So what does that mean? It means no waiting lists. It means no geographical compromise. You can get the treatment wherever it is available to you, which might even be overseas. There's no financial hesitation. How am I going to pay for this? How can I access it? The insurance will take care of that, pays it for you. And you get access to specialists, the diagnostic testing, and the treatment when it matters most. So for families, it's going to be less stress, better health outcomes, faster recovery. And for any business that may have put this in place for their staff, much quicker return to work. Okay, so these people aren't going to be off as long. So a reduced long-term absence and higher staff loyalty and attraction is a bit of a perk in terms of what you're offering. So here again, removes the delay, and it's the delays that often is the most expensive part of the illness, isn't it? If you think about it. Yeah, it's about getting that treatment quickly so you can get that lifestyle I talked about earlier in the 60 seconds back as soon as possible. All right, number three. We don't buy insurance, we buy what it does, and it protects your lifestyle, not just your income. So yeah, we'll get an income protection thing and life insurance. What it's actually getting us is the ability for life to continue looking like the life you have. Yeah, so think about that. The ability for life to continue being the same. So your mortgage can still be paid. Kids' lives stay stable. Household routines remain intact. There's no sudden downgrading at probably the worst possible time that you would be downgrading your lifestyle. And for a business, you're going to keep that revenue coming in. Yeah, revenue continuity. Overheads are going to be met. You're going to have the ability to fund replacement labor and a bit of breathing room to recover or restructure if you need to. So lifestyle isn't just luxury, it's stability. And insurance protects the stability. All right, number four. We don't buy insurance, we buy what it does. It creates certainty when everything else is uncertain. So here we're talking about, you got some life cover, some buy, sell, shareholder protection. What it's actually giving us is that fair, pre-agreed outcome when something goes wrong. Yeah. And it's that fair, pre-agreed outcome that's important. Your equity is going to be protected, not trapped in the business. Ownership transitions are funded, and the money is there to make it happen. There'll be no forced sales, no emotional financial standoffs between families or business partners. And this applies to family homes, investment properties, businesses with multiple owners, especially when there's a personal guarantee in place that has secured some personal assets. Yeah, so we'll deal with it later. Actually, we've already got a plan, which is a far better outcome. And our last option, we don't buy insurance, we buy what insurance does. It protects people beyond yourself. It's actually about others. Yeah, so rather than just buying cover just in case, it's actually the ability to keep the promises you made. Promises to your family, to your staff, and to your business partners. Yeah. So dependents remain supported and looked after. The ones who rely on you at the moment, they can keep relying on you. Staff feel valued and secure. The plan is in place, the business remains in place, and they've still got a job. The business becomes more attractive to their employers, and owners honour the obligations they've made even when they personally can't show up. Yeah, not only to their staff, to their business partner, but to their family. That's why we're in business. So good insurance isn't a cost, it's a signal of care and responsibility. A lot of one-liners today. So we don't buy insurance because we expect the worst, we buy it so the worst doesn't decide the rest of our lives. Very similar to how I like to wrap things up, which is just on this next slide. As we know, better to plan for the what if than be left with the if only.